So in today's conversation, I want to talk to you about a case that was brought over to us not long ago. And basically, one of our viewers said, listen, I just got a PenFed credit card Prequal with a potential limit of $18,000, but I already have 5 other cards. So should I take or drop the pre-qualification offer? And my FICO score is 653 and my income is $65,000 a year. So in today's conversation, we're just going to dissect the whole case. So if you are interested in learning more, please stick around till the end of today's conversation.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower with a stinging killer beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Sweaty Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about PenFed credit card pre-qualification. And this conversation will actually revolve around a case that was brought over to us by Jonah. And Jonah said, I just got a PenFed credit card Prequal with an $18,000 potential limit, but I already have 5 other cards. So should I take or drop the pre-offer? My FICO score 653. My income $65,000. So what's really going on here? I just want to summarize everything for our viewers. And beloved viewers, please feel free to pitch in if you have comments, if you have expertise. Please, we love collective wisdom. You guys are very, very smart, and so we value your input a lot. And Jonah, I know that you are listening and you are also watching. Feel free to comment. You can put your comments in the comment section below, or you can just, if you don't want your stuff to be revealed, whatever, you can just send us an email and we'll answer you. So Jonah T, this is your name, and you are 45 years old. You are a male living in Rapid City in South Dakota. I want to say a big shout out to all our viewers in South Dakota. And you are an art therapist. I really have no idea what art therapists do, but apparently it must be very lucrative. You've been in the business for 22 years. You have 22 years of experience, and you are making on average $65,000. Okay, you are divorced. You have 4 kids, and you are sharing custody with the 4 kids. In other words, the kids must be underage. That's why you're sharing custody. So you're sharing custody with your ex, and your FICO score is 653. And the thing is, right now you have 5 cards already with Bank of America, Citi, and Chase. And you basically joined PenFed in 2005. And the big question for you is, PenFed for the last 6 months, they have been bugging you with Prequal, with credit card Prequals after Prequal after Prequal. And the last one was really tempting. The last one was they send you an offer, a Prequal offer with a potential limit of $18,000. So you want to know whether or not you should take it or not. So Jonah, first things first. We really need to go back to the whole definition of how many credit cards is really too many, because you're thinking that you have 5 credit cards already. So the question is 6 credit cards many credit cards? In other words, if you were to accept this Prequal offer, by the way, when we talk about Prequal, a pre-qualification is not guaranteed for an actual approval. Okay, I mean you can be pre-qualified for a credit card, and when you actually apply, PenFed might realize that you're not a good candidate, you're not a good credit risk for them, so they might deny your application altogether. But assuming that you get approved, is adding an extra card to your quote-unquote portfolio of cards already, is that too much? Not really. So the question is, is there a thing as too many credit cards or too few? The thing is, it all depends on your financial situation. It depends on your financial situation, but also it depends on what you use the cards for. A lot of people that we know, and our team members, including our team members, we use multiple credit cards, not just for the credit limit, but for the rewards. For the rewards. And the thing is, it's always great to have access to I would say, liquidity out there. So if you need it, instead of getting a line of credit, you just have access to credit card, to limits on your credit card. So the question that I want to ask you is that, Jonah, what is your financial situation like? I mean, you are divorced, you have 4 kids, you share custody with your ex. So what is your DTI? What is your CUR? What is your credit utilization ratio? You have 5 cards already. Are those cards maxed out or not? I mean, you have a FICO score of 653, which means, 653 is not really that great. It's not poor score. It's like average, which means you have a lot more work to do to push your FICO score up. So it really depends in which category you find yourself into. Are you a minimalist? What we call minimalist. In other words, you have only 1 to 2 cards. Are you an intermediate? You have 3 to 5 credit cards. Are you the rewards aficionado, which we are because we have several credit cards, at least our team members. But the thing is, you have to understand the dynamics of multiple credit cards, which is what I said earlier. I want to go back to the importance of those credit cards for you. What are you using the credit cards for? Once you answer that question, we'll be able to tell you precisely whether or not adding an additional card to your portfolio will really hurt you or help you. Because remember, a lot of credit cards can hurt in terms of hard inquiries, in terms of if you have too many applications in a short time, this could be bad. But it can help in terms of your credit utilization ratio because your available credit goes up. And Jonah, I want you to be careful here. I really want you to be careful before making a decision. Multiple credit cards make sense in some situations, but they do not make sense in others. Right now, when we look at your situation, we see that you are divorced with 4 kids. So you share custody. In other words, you told us is a 60-40. So your ex-wife, actually, the kids will stay with her 60% of the time, and they will stay with you 40% of the time. Now, does that sort of shared custody split, does that affect your expenses? Because if you have 5 credit cards, again, I want to go back to what I said earlier. You want to have a clear idea why you need those cards. Now, there are advantages to having multiple credit cards. Maybe you want to earn different types of rewards. You love credit card sign-up bonuses. You want to lower your credit utilization ratio. You want a diverse catalog of perks. You want to pair multiple cards within a single rewards program. You are a business owner, which I don't think you are. You are an art therapist, okay? And so those are reasons why traditionally people will actually have a lot of credit cards, which is our case, for example. But I want to tell you also that there are cases where it makes sense to have only 1 credit card. In other words, let's say you want a 0% APR on purchases within a short limit of time. Obviously, I'm not asking you to close the other 4 credit cards and only keep 1, but I just want to give you a perspective to tell you that you don't always need 5 credit cards or 4 credit cards or 3 credit cards for that matter to establish the kind of credit you want to establish. Okay, you can also get 1 card that allows you to earn cash back. You can, if you don't like annual fees, you can get 1 card. I don't know the cards that you have. You did not elaborate for us when we asked you to provide those cards specifically. You just told us, I bank with Bank of America, Citi, and Chase. Those are the card issuers that gave me the 5 cards. But you never actually told us what kind of cards that you have, because it would have been really interesting to see the kind of cards that you have, to be able to have an idea about your DTI and your CUR, because based on the kind of card that you have, we should be able to tell whether or not you will have a premium card or you just have a mid-tier card. Very important. All right, Jonah. Before I answer your question, the first thing you want to do, the solution idea, number 1, you want to check your credit score to ascertain your FICO situation on all bureaus. Not just 1 bureau, but all the 3 bureaus. See, the thing is, you said that you basically have a 653. Is that the case? When was the last time you checked your FICO score? Because, whenever we hear from viewers and they tell us, yeah, my FICO score is at 715. And when we actually start digging in, we realize that, she's probably at 515 or 615 because things happen. Sometimes you have mistakes also in credit reports. So you really want to make sure that you check your credit score to ascertain your FICO situation on all bureaus. I want you to contact Equifax. I want you to contact Experian. I want you to contact TransUnion. Okay, those are really, really important, and you want to make sure you can actually pay for it, but you don't have to. There are free credit score providers. You have Credit Karma. PenFed does it too. PenFed, in some geographies, they allow cardholders to have access to their credit score for free. Okay, you have access to credit score and credit reports. You can actually sign up with NerdWallet, Credit Karma. You can do CreditWise. American Express does that. A lot of players, a lot of cardholders would allow you to have access to your free credit reports and score. Okay, this is important. So you want to be in a situation where you have a clear idea of what's in your credit reports. Do you have mistakes? Okay, because remember, a credit score has 5 elements, right? You have your payment history, the amount of debt that you have, because this is important. This is what I was just telling you earlier about your DTI. Okay, the length of your credit history. So you were 45 years old, and so which means you have an established credit history. Okay, the amount of new credit that you are actually getting, and your credit mix. In other words, the variety of types of credit you are utilizing right now. What I want to say here is that when we analyze your case, but before you actually accept the pre-qual offer, make sure that you have at least, for all intents and purposes, at least 600 to 650. Because if you want to get the 18K, you need to have a high FICO score for real. Solution idea number 2. One thing I want you to do here, and I've said this before, but I will just repeat. I want to repeat it. You need to evaluate your CUR on all 5 cards that you have open. And when we asked you, you said that you have no idea what I was just talking about, but it is important. You have 5 credit cards already, but what is the credit utilization that you have on that? What is the utilization? Is it below 30% or above it? And if it is above it, by how much is it really, really high? So this is going to be very important because PenFed is going to determine they are going to factor your credit utilization ratio into the decision to whether or not they should approve you. So this is really important. So if you have something lower than 30%, then it is a good opportunity to get another credit card from PenFed. In other words, that will help you actually expand the pool of credit you have access to, which in return will actually reduce your CUR even more. Okay, so this is important, and you do the same thing for your DTI. Those are 2 things that I want you to. Those are what we call your fundamentals, your financial fundamentals. So you really want to look at your DTI also. So is your DTI ratio high, low, or somewhere in between? And if it's low or if it's high, how much exactly? Tell us that. And now the questions I'm asking you are not rhetorical questions. Those are important questions that we need to find answers to. So Jonah, you can please feel free to comment below. Just let us know, give me the answers, or you can just send us a private email. Okay, so we need to know whether or not your DTI ratio is low, high, or somewhere in between. And you need to have a strategy where you start tracking for real your DTI on one part and your CUR, and you see whether or not you are making progress from one month to the other. This is important because, again, PenFed is going to base their decision upon whether to approve you for real. When you apply for the credit card, they will base their decision on a constellation of factors, including your job, including your DTI, including your CUR, and you better have something very nice for them to actually approve you. So this is important. I want you to really think about that. This is how you think. So solution idea number 1, check your FICO score. Solution idea number 2, evaluate your credit utilization ratio and your DTI to make sure they are reasonable. I'll be right back for solution idea number 3. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation around something that Jonah T sent us. So Jonah, you really want to know whether you should take the Prequal from PenFed or not. So solution idea number 3, you want to update your income information with PenFed. Make sure their systems reflect your most recent pay info. This is really, really important, Jonah, because think about it. You have been a PenFed member since 2005. That's a lot of years. Okay. And the thing is that you haven't said whether or not you have applied for a credit card over the years. But if you haven't, it's really, really important that you update your income information, because 2005 you weren't making $65,000, and you did not have 22 years of experience as an art therapist. Okay, so this is important, and the thing is, this could affect how much you get approved for, if you do get approved at all. Okay, and the thing is, that's number 1. Number 2, I want you to set direct deposit right now, if you haven't already, into a PenFed account. The funny thing is, anytime we give this advice, some people laugh at us, like, I don't see the link between direct deposit and credit card approval, or loan approval for that matter. But they don't know. It's not really their fault. They really don't know there is a strong correlation. There's a strong correlation between direct deposit and your cash inflows, and the ability for the lender to see your cash inflows and their propensity to approve you for credit cards and loans. So this is important, Jonah. I really want you to split, to have some kind of direct deposit into a PenFed account, so you can be approved faster. Okay. Now, a direct deposit does something very good. It shows your pay frequency, whether you were paid once a week, once every 2 weeks, once a month, once a quarter. It really shows your employment and employer information. So it shows who is wiring the money to you and how much they're paying you, and which is the third data, which is, what is the pay amount? Is it consequential or not really consequential? You are making $65,000 a year, which is really, which is good. It's a decent income. So you should be having some direct deposit into your PenFed account. Solution idea number 4. Jonah, I really want you to be careful here before you even apply. Make sure that you don't have any upcoming loan or mortgage application. So our answer is, you should take the Prequal offer. You should take it, because you don't lose anything. However, you need to make sure you have nothing else coming, nothing else coming up. If you have let's say you have a mortgage application in the next few years, or not a few years, next few months, you really don't want to do this now. Okay. But remember, you are divorced with 4 kids. So all you can do right now are things that you can actually control. In other words, before you accept the Prequal offer, I want you to set a system in place where you pay your bills on time, because you are trying to boost your chances of scoring a pre-qualified credit card offer that is high enough, but also scoring an actual approval of credit card that is very high enough. So this is really, really important. You want to keep your balances low. Whatever you have on the 5 credit cards you currently have, please keep your balances low. This goes back to what I said earlier about your credit utilization ratio. You want to check your credit reports. Okay, those are important elements. You want to improve your credit with more accessible products, This is important, and you want to update your income. So I just said this. It's really important, just to recap here, that if you want PenFed to actually give you the 18 grand, and if you want that to happen, then you need to do some work. Now the funny thing is, we were kind of surprised when you said that PenFed actually gave you a number. Like, they told you could pre-qualify for $18,000. This is really good, because usually they don't do this. They will tell you are pre-qualified, but not give you an actual amount while you are still in the application process. So this is important. But I just want to say, the thing that is really important here is what? You want to make sure that you can go to a branch if you want to. If you live in the vicinity of a branch, you said that you live in Rapid City, South Dakota. I'm not really sure. I'm not familiar with that geography. I don't know if PenFed has a branch in South Dakota, but it will be nice if you can just to go to a branch and sort everything out back there, so you don't have to come home and have a conversation. You can actually just do things yourself. This is just fantastic. Thank you so much for your attention. I really appreciate it. Jonah, we really appreciate it. Dear beloved viewers, we appreciate your attention. Please feel free to comment below if you have questions or answers to questions. We really appreciate that. But until then, I will see you next time. But until then, remember, stay marvelous.